and also looking forward to, given what is happening with FTX and stuff like that, what is the landscape looking like? So to start off, if I may just ask a very quick sort of self-introduction from each of our panelists. Tristan, sort of 30 seconds introduction.
30 seconds.
Yeah, that's right.
Yeah, so anyway, I'm Tristan. So previously I was a director of investment for X21 Digital. So what we did was like we invest in quite a lot of layer ones, DeFi projects since 2017. And now I'm actually representing Zokyo. So Zokyo is actually a security firm as well as a private equity firm. So we have to support, secure, build, as well as invest in legendary crypto projects. So we have a team of top-tier security auditors. We do QA, we do back-end smart contract auditing, pen testing, etc. And we also do advisory on tokenomics, engineering, and investments. So if any case you guys would like to speak to get to know more about security or about investment-wise, in any ecosystem, be it like Move or be it like Golang or Rust, we do support all those as well. So happy to chat with anyone that's interested. Yeah.
Yeah, Tristan's an expert, right?
Hey.
Marwin.
Nice to meet you. I think that was more than 30 seconds. Hi, my name is Marwan. I am with ConsenSys. What I spend my time on is essentially connecting with the builders projects in the DeFi space, wallet space, some tooling as well for like infrastructure and whatnot. ConsenSys, for you who may not know it, is a company that does a few things in the Web3 space. So we have, for example, I'll summarize it into three areas, right? So there is the user focus with the MetaMask wallet. So that's focusing on the retail users, but also on the institutional users with some of our partners. And we also focus on the infrastructure side with providing like RPC infrastructure as well as smart contracts, auditing and security tools. And then also we are looking at scalability areas by providing like ZK technology and all that. So a bunch of things. For me, I just speak to builders and see how we can help them with all the knowledge that we have.
Right, thank you, Marine. Lots of stuff as well. I'm sure there's lots of stuff going on at Kobo too.
Hi, and great to see everyone here. I'm Lily from Kobo. Kobo is one of the largest custodian technology service providers in Asia Pacific. At Kobo, we provide a portfolio of custodian solutions for clients' different needs. We provide HSM-based centralized custody, which we partner up with MetaMask institution. And we also provide MPC co-managed custody. We also provide smart contract-based custody. We also have a product called Superloop that is an off-exchange clearance and settlement network that help hedge fund teams to trade without the need to pre-fund the exchanges.
Thank you, Lily and Zhuling.
Yeah. Hi, everyone. Great to be here. My name is Zhuling, CEO of RockX. So RockX is a institutional staking and data provider. So we help business and institutions to, number one, interact with blockchain through access nodes. So they don't have to build themselves, they don't have to maintain it. And at the same time, we help them to do self-custody staking. So while us safeguarding all the blockchains, we generate the fixed income to our customers while all the funds stays in their own custody or wallet of choice. Yeah, and lastly, we use MPC technology to manage our validators in order to make it secure. So, in this case, wallets, custodies, exchanges are actually our customers.
Right, so thank you, panelists, for your self-introduction. And before I forget, if any of you in the audience who would like, a question for our panelists, we will have the last 5-10 minutes of the panel discussion. So if you raise your hand, we'll come to you with a mic, and you can pose your question to the panelists. So to start off, so cybersecurity and the custody of funds in blockchain. So let's talk about what we mean by custody of funds in blockchain. Right? And many people have many ideas, right? It's about Web3, it's about DeFi, it's about CeFi, it's about GameFi, it's about, metaverse. Or there's a lot of different angles that you can tackle that. So if I may just start with you, Tristan. So what do we mean by custody of
Yeah, I mean,
funds?
I'm pretty more experienced in the security field, but I think definitely custody, when we talk about custody in the Web3 industry, is definitely different from traditional custody, because I believe traditional one is more towards physical stocks, as well as maybe like the bond certificates. But with Web3, with the decentralization and the trustless system, custody is so much different here. So it's much more versatile here as well. So clients, I believe, they can actually get exposed to more safe custody, more security as well through like different platforms such as Kobo that they offer. Yeah. So perhaps maybe Merwin and Lily, they can provide.
Yeah, I'll touch quickly on this because Consensus is very invested in education around self-custody, right? So the main reason why we built Web3 is really to allow individuals to be owners of their assets by using this technology of blockchain. Now, this is, to be very transparent, is not easy or given for many people. Like, the user experience is not ideal. It's a bit hard. I mean, good luck getting your non-technical person to go and get assets. And that's where there was a lot of providers that give you a centralized custody. So they will do it on your behalf, right? And that's where some problems do show up, because some of them may be not good actors and whatnot. For us, we are really trying to do two things. First of all, keep educating on why is it important to do self-custody. We just launched, I think a couple of weeks back, a MetaMask Learn platform. It's a very nice website, very easy to understand. It has some courses in it that I would even recommend to non-crypto people. Like, you can share it with your friends and they can go and understand a little bit why self-custody, what is it like, how do you get there, in very simple terms. So the education is one big arm, and you will see more of this campaign through the social media and so on. The second part is, of course, building the tooling to make such a thing, which is self-custody, doable, easy. So a lot of work is being done on the MetaMask side and allowing the users to have a foolproof tool to do the self-custody. Until then, there is, of course, a lot of requirement for central custodians to help the users who don't want to deal with that and struggle with it. And perhaps to that, I'll let...
Yeah, so Lily, if you could add on, Marwin's point about self-custody and centralized exchange, and also, of course, wallets, which Kobo is very strong in.
Custody is usually referred to as the institution's wallet for safekeeping their digital assets. So it also lays the foundation for other business to flourish, such as payment services, banking services, prime brokerage. So it's well regarded as the gateway for institutions' adoption of digital assets, whether it's self-custody, centralized custody, or co-managed custody that MPC provides. And the cybersecurity is a very critical part of it, but custody is more than cybersecurity. Cybersecurity imposes protection of computer systems, networks, and assets from unauthorized use, theft, or damage. So, but custody is more than cybersecurity because it also interacts with on-chain, off-chain workflow, team collaboration, and interaction with more applications.
That's right, yeah. Lily, you make a very good point there as well. As we see from the FTX scandal, there's a question about custodizing the institution assets together with the customer assets. There's no segregation. So that's an important governance aspect when we talk about custody as well. And Juling, yes, so your perspective in terms of what it means, what you think we mean when we talk about custody in blockchain.
Yeah, I mean, all the panelists have touched most of the parts. I mean, from our perspective, because crypto is all about the private key that determines the ownership of that assets, and also who has the rights to use those assets, right? So for us, custody is more about who holds the private key of such assets. Yep. So there are cases where we are all transferring our assets to a, let's say, an exchange or a custody. So that means, the private key is with that company. Whereas if we're using MetaMask, we have to keep the private key. Then there's a third part, which is we send all the tokens to a smart contract. So which means there is a smart contract that holds the private keys. But of course, if you trace it back, there is someone or some kind of logic that manages the private key. So different models have different use case, but more importantly, I think this is also a question of who is responsible of keeping the security of that private key, right? So if it's a custodian way, you have a counterparty. So there comes with risk, but also clear liability from your counterparty. If it's your self-custody, you are holding all the responsibility of keeping your assets safe. Yeah. So I think all different ways will have its relevance in the future.
Right, so Juling, if I may stay with you, that brings us very nicely to the next topic, which is about cybersecurity. And a lot of the incidents that we hear about is, of course, stealing the private keys to gain access to the funds. So tell us about some of these high-profile cyber security incidents that we hear in the blockchain world, of course.
Yeah. I think a couple of months back, there was a big exploit on Binance Smart Chain. We can also trace back to 2016 when the DAO was hacked. That was probably one of the largest one and also kind of impacted the existence of Ethereum, which forced to a fork into ETH and ETC. Yeah.
That's right, yeah. And Lily, your perspectives on the biggest cybersecurity incidents?
I'm not an expert in cybersecurity, but as a custodian, we watch the market data closely. So 2022 is definitely the DeFi hackers' best performance year. So in 2022, you see DeFi incidents, like more than 300 of them, and in the loss of more than $4 billion US. And at the same time, if we compare to CeFi incidents, the volume came down from 6 billion loss in 2021 to just 800 million loss last year. 800 million is not a small number, but compared to the loss in DeFi protocols, the loss in DeFi protocols is much more. So it implies the booming of DeFi applications on chain last year, but also alerts us like the interaction with more blockchain protocols bring us more risks to assets. So there is a very interesting slogan for Web3 in 2022. They said, if Web2 take your data and the Web3 take your assets. That's what happened in 2022.
Right, yeah.
So even, especially for big institutions, 2022 is a big year because they came into Web3, the space, in 2021, the year of FOMO, but they became the top victim in 2022. So we serve a large community of DeFi and CeFi players. So we interact with them daily, and we also help them with identify their vulnerabilities and their system defects. And we do think with the booming of on-chain applications, these projects do need to pick their custodian wisely so they can rely on custodians' expertise to audit all the smart contracts on chain. And also if they are using a centralized custody, they will also need to design their workflow wisely to make sure external and internal risks.
Right, yes, yeah. These are obviously some of the lessons that we have learned, and we'll drill deeper into some of these in the next topic. But if I may come to you, Maureen. So in terms of cybersecurity incidents, Zuling talked about the DAO incident 2016. Lily talked about DeFi, dominating the cybersecurity incident landscape in 2022. But of course, we also hear about Axie Infinity, and which is kind of like GameFi, but some would say it's a cross chain sort of hack. So tell us your perspective about cybersecurity landscape.
Sure, sure. So I think to really appreciate the importance of cybersecurity, you have to look at what are the risk buckets in the space that we are working in. And without going into much details, I'll probably speak about two areas. The first one is essentially very classic cybersecurity, where because of self-custody, because you can put the power into the hands of one key, essentially, the most vulnerable attack vector is still the human factor, right? So you will hear about a lot of incidents that happened recently that is mostly social engineering hack, right? So take over their Twitter, take over their, I think the poor, Telegram. Bill Murray got hacked for his NFT collection that he just sold. Such a nice guy on TV, but still, you can engineer it. In my Instagram today, I have two of my good friends who are hacked there by a crypto group, and I keep receiving messages, and I try to look at these messages and analyze. It's a lot of social engineering. It's like they use the verbiage of your connections, they use the same language, and you can really put your guards down, and if you're not careful. So these are still probably the same problems that Web 2 have to deal with, right? So the standard stuff. The other angle of it is the fact that Web 3 and blockchain is such a still evolving, experimenting, discovering new things, that many of the solutions that we go and deploy today, they haven't been tested hard enough by real life. I mean, I'm sure the developers are testing and many companies providing smart contract audit, et cetera, et cetera. But if you look, for example, at some bridge hacks and whatever happens with Axie as an example, that's really just more of a scenario, let's say, that the bridge designer did not think about. And because Web3 is mostly open source and clear, you can put it there, people can look at it, and then if you get somebody looking at your invention from a different perspective of how do I exploit it, there will be scenarios that have not been thought through. And the good thing is that as hacks happen, that's a good thing, silver lining is that as hacks happen, those get plugged, and we learn from it and we improve. And then the hackers also will keep improving. But ultimately, yes, I mean, there is the human factor, there is the technology itself. Most of the apps you interact with today is a Web 2, maybe like an interface with a smart contract in the back. So it's very important for us to go and break down the risk on all of these parts, and each one of them see what are the learned lessons and what we can employ in there.
Right, yeah. So Tristan, you got something to add on that?
I definitely agree with Marwan, because I think the main reason why I joined the cybersecurity industry was because I was personally hacked as well on Telegram. So like I think social engineering hacks are on the rise. So I mean, I just opened like a zip file, and then my MetaMask funds were actually automatically extracted without my knowledge. So it was pretty bad. And yeah, so I think that's why cybersecurity and is so important, because we always have to fight against all these exploits, and we never know when these exploits can happen, because as technology improves, with the presence of AI, with ChatGPT, so we are always hackers. We always try to improve their ways of trying to exploit projects' funds, users' funds. Yeah, even like in 2022, right, we see a huge rise in exploits. So this is in the case similar trend. When there's a bear market, there's an increase in exploits, and not only in 2022, like the trend even continues towards this year as well. In February, we see like big exploits like CowSwap being exploited, like Wandaverse being exploited, and like all these are newer scams. For example, like phishing scams. Even CowSwap is like through an exploit of the settlement contract. And so like projects, they always have to have mechanisms in place to always be able to react efficiently and effectively to hacks. So like they should have like a smoke test. So for example, if they should do like a trial exploit test. So if they were to be exploited, right, how are they going to react and stuff like that? So
it's a bit like a sort of
like
self-auditing.
Yeah, correct. So they
your
should.
own.
Yeah, I feel like protocols should always be ready in terms of how to handle these attacks. Have a good response system in place, and also have like third-party auditors like Zokyo. We can come in to actually help to give advice on how do we improve the code, and how do we do like response systems better to further secure the funds in case of an attack. Yeah.
Okay, so that brings us again very nicely to the next topic, which is lessons learned, right? So you talked about doing some self-audits and third-party sort of review of code. Marwin, what do you think are the lessons that we learned from all these hacks? Because as Tristan is saying, we are still seeing them. Never ends.
I don't know. I think what we at Consensus at least are still very much focused on is really the self-custody movement. And so things like what happens with centralized hacks and whatnot is just a validation that you should do more self-custody. But then it's not so easy. We have to teach people what are the tools, what are the things that they can use, what are the best practices. So yeah, there is not one lesson. It's more of like it makes us aware of what are the things that we still need to improve in a way. Yeah.
Yeah,
Not
as you
much
were
to say.
saying that the Web3 space is still very new, isn't it? So in terms of like the best standards when it comes to code audit or code reviews and software development cycle, I guess there's still quite a big moving sort of
No,
goalpost.
still a lot of things to build. Like we do have, for example, an audit team that is very expert. They will look at the smart contract and that they will do their work and whatnot. But it's still such a manual work, and it takes time, and it's costly. And so as you want projects to develop faster and have like continuous releases, an area that is interesting is, for example, the tooling that you can integrate to your DevOps process to be able to do constant review as you're writing code and publishing code. From a user perspective, like if you look at the wallet space, there will always be, transactions that you didn't approve or mistakes that are happening. So we are working with a few projects that are trying to look at that and say, well, what can we build? So interesting projects will do, for example, a database of intelligence that tells you that, hey, this smart contract you interacted with, it is flagged that it's a bit risky. So giving that information to the user will allow them to maybe take the precautions. Some other solutions are leveraging like front running and MEVs to go and stop a transaction that is already submitted and go essentially and retrieve the funds before they get sent to the attacker wallet. Some other projects focus on the post-fraud, right? So, okay, the funds are stolen. What do we do about it? How do we retrieve them? So there is multiple dimensions to the problem, and all of them are actually kind of improving. It's going to take time, but hopefully in a short enough period, we will all meet at this intersection and say, we have strengthened all the angles. And then the hackers will find something else.
Right, yes, yeah, I know. Bitcoin was sort of came into the scene in 2008, so it's a very, very new field, the whole field of blockchain. So Lily, so what lessons can we take from all these cybersecurity incidents that never seem to slow down or go away?
I think if safeguarding of digital assets has to be solved soon. Otherwise, we will not be able to see the movement of mass adoption of digital assets. And the evolution of Web3 will just remain in a very exclusive community. It will not be a mass adoption at all. And I think from the incidents, we also see people's curiosity. We see that custodian institutions' wallets are not a safe box anymore. Interaction and the participation is still the core value of blockchain. So knowing that my assets might be hacked, but you still see so many active participation and interaction with on-chain applications, that raises some new challenges for custodians like us. It becomes our mission now, because you see the movement at the user side, technology side, and application side. At the user side, you see not only the rapid growth of number of users, but also see the type of users evolving from programmers, CryptoPunk, to large institutions. And you also see booming of crypto-native organizations like DAOs and crypto funds. They have unique needs to interact with on-chain protocols. And on the technology side, from Bitcoin 2009 to the introduction of smart contract in 2015 to some alternative smart contract-based blockchains, you see more and more layer ones, application-specific blockchains, and even modular blockchains with layered rollups. And the multi-chain, multi-layer world definitely give rise to user asset application fragmentation. And on the application side, before 2020, crypto exchange and some payment services are the main applications. But since then, smart contract fuel the booming of new applications. Now you see DeFi, DAO, NFT, each of them became a multi-billion-dollar business. So this trends, movement in users, technology, and application side all calls for custodians' awareness to accommodate for such needs. SafeBox is no longer an option for custodians.
Yeah, I like your point about this no adoption without security, right? So we need to get this right to prioritize the safeguarding of our clients' assets and, of course, our own assets. Julings, your perspective on the lessons that we can take from cybersecurity incidents.
I mean, for everyone who's here today, I think either we are holding crypto assets or we're thinking of getting into crypto assets, right? So the first question to ask is, what kind of way is most suitable for me to store my crypto assets securely? So, if you're not super tech savvy, probably going into a licensed custodial makes more sense. Yep. So this is the part where you do need to think about the counterparty risk, whether it's licensed, whether they have very good back-end processes, whether some large institutions are using it. Think about it's like you're not putting your SIN dollars into an unlicensed bank, right? So that's kind of the same thinking process here. While during our chat with a lot of large financial institutions, a lot of them are also building their own custodies. Yeah, because that is their way of learning the whole process and also to prevent a lot of cybersecurity incidences. Then the second part is that, okay, if you think, cool, I think I'm tech savvy, I want to do all the stuff myself, a self-custodial wallet definitely works the best for you. Yeah, but of course, do spend some time, think about how do you keep your private keys. Yeah, because that's something that you never want to share with others and you don't want it lost it. Yeah, if you lose it, you can never retrieve it. Yeah, so that's the first part. You need to think about how to choose the way to store your assets. Then the second part is actually where most of the incidents happens, is once you have your assets stored and you start to look for yield opportunity. So that's the part it gets trickier. Yeah. So most of the time, when we talk about yield, actually yield comes either from trading profit or lending interest, right? Both of them requires you to move your assets to another party, so it's lent out or it's being traded. Yeah, but this is the part where whether it's DeFi or it's CeFi, you need to understand how exactly they're using your money. Yeah, if it's a DeFi protocol that actually they have a backdoor or they're actually not being lent out, but it's more like a Ponzi, you have to be alerted. Do your own research on this part. Yeah. And actually, a lot of wallets and custodies allows you to do trading and lending through it. I believe Kobo has Superloop, so you can trade around it. A lot of wallets allows you to connect to DeFi protocols for lending, etc. For us, there's another safer yield opportunity, which is self-custodial validation staking. So this means that you're actually participating in a blockchain's validators. So the blockchain itself rewards you. So the yield is actually a block reward, rather than it's being traded or lended out, right? One problem we see, or one challenge we see in this whole market right now, given what has happening on Kraken, so SEC is actually saying that, right? When people say staking, you actually don't know whether this how exactly your funds are used. Is it being traded, or is it being lent, or is it actually being staked on a validator? Yeah, so this is the part. If you're using a service, ask them what exactly your funds are being used, and assess your risks accordingly. Yeah.
Right, so thank you, Juling. Yeah, so Juling, you just point out a few different solutions and some tips for the users to be aware of. So Lily, if I may get your views, what are your advice to the users? Some of the tips, when they think about how to custodize their funds. What would be some of the tips you provide?
Because we serve institution mostly, so my advice would be to institutions. I think there are two considerations that a project team should have when they pick their custodians. One is, how could the solution help me to mitigate external and internal risks? Because when it's a team involved in blockchain interaction, you are facing internal risks as well. And the other question you should ask is whether the solution can help me to have both accessibility and the security of my interaction with blockchain applications and other applications. So, and I would be glad to introduce Kobo to them, because for centralized CeFi projects, if they have a need to be compliant with law, our centralized custody solution can help them with audits, with compliant with regulations in multiple jurisdictions. And if it's a team at the frontier to deal with the most advanced DeFi technologies, then I would suggest you can use our smart contract-based custody, which is programmable, and also self-custody. And if for a team that cares about control of private key themselves, then we also have co-managed MPC solution custody for them. So, and if you are a trading team looking to get yield from both CX and the DEX, then we have a super loop for you to mitigate exchanges counterparty risk. And we also have Argus, our smart contract-based custody, to help you to get yield from DeFi protocols more safely.
Right, so thank you, Lily. You talked about internal risk, and which is also the point that Maureen brought up about insider threat, isn't it? So what would you, Maureen, your advice to users, whether it's institutions or consumers, what should they be think about when they choose their custody solutions?
I think the most important part is really to understand each use case has different requirements. And so who are you? What are you trying to do? Sometimes you want to maximize protection against internal risk because you have a group of people who can actually perhaps collude to use your funds. Sometimes you want to protect against external risk because you're handling large amount of assets and you might be a target to either governmental or hackers and whatnot. Sometimes actually you want to create efficiency in terms of approving transactions and getting things done because you are doing very quick transactions and so on. Sometimes you're just buying to hold and you're going to forget about your BTC for 10 years. And so each use case is a bit different. And each one has different risk profile. Each one you will have to go and map it to a particular tooling and particular approach to how you do the custody. And I wouldn't be surprised that you would use a combination of 3 or 5, right? The best rule is always never put your eggs in the same basket, right? So yeah, there is no straight answer, but think about it from a use case point of view, what am I trying to achieve, what are the things I want to maximize for, and then combine the available tooling to cover yourself.
Yeah, don't put all your eggs in one basket. Yeah, very sound advice. Tristan, you talked about phishing earlier, so what are your advice to users?
I mean, apart from safeguarding funds in custodians, right? So I mean, if users they want to further invest their funds, in protocols, sometimes like as a user, right, you see protocols that promise a 1,000% APY or a yield farming, like degen yield farming, right? So I think some people they are tempted to put their funds inside. Which has the potential of getting stolen or getting rug pulled, right? So I think it's very important that users actually do their own research and due diligence of these protocols, whether they are backed by a third-party auditor or whether they are transparent in terms of their team information, team background, and how are they going to generate this sustainable APY.